Now, legislation to combat carbon emissions sets up a cap and trade system for those carbon emissions. Should you buy solar stocks, for example, if you think that cap and trade is the future? Well, my first guest is Gordon Johnson, analyst at Hopolium Securities and expert in all things solar. Gordon, it's good to have you with us. Let's start with the macro picture just for a moment, because, you know, when we talk about clean energy and alternative energy, everyone then says, well, solar, that's the place to be. Is that just a very long-term trend, or is there something more afoot that we need to pay attention to?
Thanks for having me, Pim. I think that's a long-term trend. We just actually recently concluded our analysis of supply-demand across a number of different solar industries. And what we found is that across a number of industries in solar, you're going to have a massive oversupply this year. That means supply is going to exceed demand. And the key issue with solar right now is to get a solar project done, you need a significant amount of financing. 70% of solar projects are debt-funded. And the issue is that clearly the credit crisis has caused a lot of banks to not have the ability to fund solar projects. Keep in mind the dynamic of a solar project requires a bank to issue a 20-year loan, and that loan is relatively illiquid, meaning there's no securitization market for that, at a pretty low interest rate. So given that banks are capital constrained right now and there's still issues, there's some challenges there, and that's weighing on the solar market.
Yeah, I mean, it would seem as though banks, if they've got a lot of commercial real estate loans on their books or residential loans, they got other bigger things to worry about than going out and lending money for 20 years to a solar project. Having said that, though, you just attended this week the Analyst and Investor Day for First Solar, one of the largest solar companies. There were some positives, right? I mean, there's this whole issue of conversion, right, of converting. What's the efficiency of actually converting sunlight into energy? What did they come out with?
Right. So First Solar's Analyst Day, very well attended, one of the most well-attended Analyst Days we've ever been to in the solar space. Efficiency conversion is the amount of sunlight a solar panel turns into actual energy that you and I can use in our home or our businesses can use in the buildings. First Solar's current efficiency conversion is about 10.7%. Now, at the Analyst Day, they focused on trying to get that efficiency conversion to about 12.5% by 2012. So we're talking a little further out. However, I think the issue is that First Solar's efficiency conversion is 10.7%. The competing technology, PV crystalline, has on average efficiency conversion of 17%.
So they're already ahead.
Far ahead, and they're targeting about 22 to 23% on average by 2012. So I think you have to keep that in mind when looking at First Solar's targets.
All right, now that was some of the positive things they were talking about, this idea that they want to ramp up this efficiency conversion. There were some negatives, right, that you pointed out.
Right. Keep in mind that First Solar, when looking at enterprise value to sales multiples, First Solar trades at over a 200% premium to the group average. So First Solar is clearly a stock that investors love. Headed into the Analyst Day, the expectation was that they were going to increase their capacity targets for 2010. They were going to raise estimates, and they were going to significantly reduce their cost reduction by 2012. None of those things happened. Keep in mind also that a number of First Solar's customers that represented individually between 11 and 19% of their revenues in 2008, have made some very troubling comments. Phoenix Solar recently came out and announced that they're cutting numbers due to industry oversupply, excess inventory, so they're writing down their inventory, and a total collapse in PV crystalline module prices, which is the competing technology for First Solar. Now, keep in mind, 60% of Phoenix Solar's revenues, or their mix of inventory, was First Solar inventory in 2008. So if they're writing down inventory, i.e. First Solar inventory, the majority of it, and they're saying First Solar's competitors are significantly cutting prices, we see that as a headwind for First Solar.
That sounds like a lot of competitive problems that are emerging. All right, we're going to talk more about the solar industry. Coming up, we're going to talk about some of the other stocks that Gordon Johnson follows, and we're going to take a look at another industry that actually may benefit from increased attention to climate change. Exchanges. How do you trade carbon emissions? We'll tell you, and we'll also tell you how perhaps you can profit from these cap and trade policies. This is Taking Stock on Bloomberg.
Knowledge that the United States over the last several years has not been where we need to be. We're not going to get there all in one fell swoop, but I'm very proud of the progress that's being made, and I think that the energy bill that's being debated in the House is an example of that progress.
That was President Barack Obama today talking about how the U.S. has been behind Europe on the issue of climate change. This is Taking Stock on Bloomberg. I'm Pim Fox. My guest is Gordon Johnson of Hapolim Securities. We're talking about solar stocks in the context of climate change. Gordon, you're an expert in this world. You just attended the first Solar Investor and Analyst Day in New York. When you heard what they had to say, did it occur to you that perhaps they're actually kind of competing with their own customers in a way? How's that?
Indeed. What First Solar is doing is they basically have two segments, their module segment and their project segment. And what First Solar does in their module segment is they sell their modules to project developers who then go and install massive 10 megawatt to 1 gigawatt solar facilities. However, what First Solar noted at their Analyst Day, which is new to their model, is now they're entering into the project business themselves. And when they were pressured on this question, or this topic, they were asked, why are you doing this? You're competing with your customers, which is in fact the case. And their answer was that we're going to focus in the U.S. and our project development customers are focused in Europe. However, Phoenix Solar, Conergy, et cetera, they're customers. However, I find it hard to believe that those customers aren't going to migrate to the U.S. once it develops as a major solar market.
All right, so the idea being that you've got a question of prices coming down, right, in the solar business, whether this is for thin film or for polysilicon.
Right.
Which camp does First Solar fall into?
I think First Solar, we haven't necessarily seen the impact to their financials or fundamentals from price declines yet. And that's really why the stock, I think, is trading at such a massive premium to the peer group. However, keep in mind that, we mentioned Phoenix Solar on the last segment, but also Conergy, which also represented between 11 and 19% of their revenues, came out and said that they're going to have a significant decline in their solar business. And then Colexion, which is another major customer of First Solar's, saw their inventory basically double Q4 to Q1. And then lastly, EcoStream, the parent, just went bankrupt. And there's some speculation that nobody's going to step in and buy them. So these are all major, large customers of First Solar that are facing significant headwinds at a time when PV crystalline prices, the main competitor of First Solar, prices are coming down significantly. So you have all these pressures out there. First Solar's peers, their stock prices have gotten hit as a result of all these headwinds, but First Solar has not seen the impact to their fundamentals, and that's why I think that there could be some pressure out there for the stock.
All right, but let me press you a little bit, because, I mean, this sort of sounds like we go back to the world of beginnings of chip making, for PCs and computers. I mean, do you think this is a case where investors are just saying, look, we don't really know which technology is going to win. We don't know whether it's going to be thin film. We don't know whether it's going to be polysilicon, crystalline polysilicon technology. So you know what? We're going to put our chips on as many different solar types of projects as we can, and we expect that we're going to lose money on some of them, but we don't know which ones are going to turn out. Is this the kind of climate right now for solar stocks?
Well, I think the climate is shifting. Recently, there was an economic forum held in London, and there was a panel of bankers, and they were asked the question of what technology do you prefer now, thin film or PV crystalline? And what they said now unanimously is that they prefer CSI or PV crystalline over thin film. And the reason is simple. Last year, polysilicon prices were $450 per kilogram. Today, they're $60 per kilogram. Polysilicon represents a major cost input to First Solar's customers, the ones who make PV crystalline cells.
Silicon is like one of the most abundant things in the world.
Exactly. It's a commodity, but it was very expensive last year because you had a massive demand from solar. Now that demand has come down, it's not as expensive. So these guys can make their modules for probably 80% less than what they were making it for last year. Keep in mind, their efficiency conversion, the PV crystalline guys, is much higher than First Solar's. So now
First Solar using that thin film technology. Exactly. The other people you're talking about, the competitors, using that polysilicon technology.
Right. So there's technological limits on thin film, the efficiency conversion. So if you have a price that's equal, yet you have a higher efficiency conversion for CSI or PV crystalline cells, the majority of people are going to favor PV crystalline. One other point I want to make, the banks, the guys who finance this, see thin film as more risky as an investment than PV crystalline. And the reason is because these are 20 to 25-year lifetime products. So if you're going to invest in a thin film project, you need some example of does it last this long. You don't have that evidence for thin film. This thin film technology has only been around for about 4 to 5 years, whereas polysilicon or PV crystalline technology has been around for over 20 years. So you've seen it work, and you haven't seen the thin film work. So now that the pricing has come down, bankers, the guys who drive demand in the solar market, are favoring PV crystalline over CSI or over thin film. That's not known by U.S. investors. This is something that's widely known in Europe, but is not known in the U.S. And I think once it is known, that's another risk that is facing First Solar. Germany was 74% of their revenues in 2008. That's a European market.
All right, so when you talk about Europe, that's what I wanted to ask you, is what's the state of financing coming out of Europe? Because we know that the economic recession is certainly pinching lending in the United States. What's it doing to, let's say, government subsidies in places like Germany, like Italy, like Spain that have big solar markets?
There is massive, massive declines in solar demand in Germany. Phoenix Solar, in their report where they negatively pre-announced earnings, said they expect the German market consumption to be 1.8 gigawatts this year. That's 10 to 30% below where consensus is right now. That's right in line with our 1.77 gigawatt estimate. That is a significant data point. I think it's going to potentially come in below that. Germany, the banks in Germany are facing just as much pressure, if not more, than the banks in the U.S. And the issue in Germany at this London Economic Forum, which was focused on this exact topic, was that, banks are wary of doing solar projects right now because, again, they're 20 to 25-year loans. It's an illiquid
with no
asset.
proven track record.
Exactly. So banks are requiring a higher interest rate, and if the interest rate is higher on the solar project, the module price has to come down to make the return equal. So there's a lot of pressure in Germany. In Italy, the same problem. And also in Italy and places like Greece and France, you have bureaucratic hurdles. It's also limiting demand.
All right. Well, I want to thank you very much, Gordon Johnson. This is not a topic that's going away anytime soon. Appreciate your coming in and enlightening us in the world of solar. Not all bright, at least according to Gordon Johnson of Hop Security.